Alrighty, let's go into reports. Let's look at the profit and loss. Let's select 7/1/22 to 12/31/22. So when we run it like this, we're going to see all of the data in one. And let's go ahead and do that first, right? So let's look at how 2022 went in terms of that full year of opening to December 31st. Had about $44,805 in sales. You spent about 13.6 thousand on cost of goods sold. You have 5,000 of coffee and bean supplies, which is a good majority. Your next good majority is dairy and grocery costs, and your next is paper cups and goods. So this all kind of lines for a cafe, where a lot of the big purchases are based in, um, what drives the core of what you have to give out to people. The next thing is you'll see that the merchandise sales were only 270.50, but the purchase so far has been 814. So this is kind of good to kind of see, well, you've spent 814, but you've only sold 270 of it. Is merchandise really worth it for you in the long run if, it seems to not move very well or you have to sell it for really cheap? Moving on to expenses, we have about 1,200 in advertising, a little under 100 for bank processing fees, a little bit of dues and subscriptions that we're paying. Lease obviously makes up a good amount of this, as well as paying ourselves for the time that we're being here. So we have utilities, insurance expense, water, and electricity expense. These are good here as well. And we have our interest expense here. Looks like the business has profited -$5,000 for the year so far. And so, how is this possible that we did all of this? Our gross profit was 31,000. Our net operating income ends up being this after we pay ourselves, right? So let's take a look at the balance sheet and see how healthy everything is. I'm going to set our date range to, we can set it to the same 7/1/22 to 12/31/22. We're going to hit run report. Alrighty. So as of December 31st, 2022, we have about 1.5 grand in the bank, which is a little concerning, but should be good to go. We have about a negative sales tax liability number, and I'll come and I'll teach you later on in the course because this is a little more advanced way of dealing with this. So I don't want to introduce it just yet. This will be kind of in the holistic review of after you've caught everything up, how do you go and adjust some of these things like the sales tax liability. We can see we've been paying our loan down pretty consistently from 7,500. After about 6 months worth of payments, we've landed about 6,500 left on the loan. We have our contributions and our net income is still negative. So overall, even though we haven't profited on paper, what we see, let me have the profit and loss open actually in a separate tab. The business itself is running a small deficit right now because it's still kind of having to absorb that cost and it's still having to grow a little more. But to the owner's perspective, the owner was able to take home $25,000. So what does this really look like in terms of like if you were to back out the owner payments? Um, you could actually look at it as because if you're a sole business owner, this is kind of how you would want to look at it. Yes, that net income looks like, oh, I didn't make any money at all. But if you want to really look at it from a financial perspective, you would do 25,000, which is paid out, minus the 5,552.82. And your net profit could actually, for the business, would be 19 for the owner, sorry. The net profit for the owner would be 19,447 for the year. However, and this will be kind of later on in the course, I'll kind of introduce some like, bonus videos to kind of understand some of these numbers. But to an owner, this is kind of an important number to see what their net income is from the whole deal. Because remember, they put in a contribution of 15,000, right? So by this number, they've kind of made it back, even though they had been working there. But again, like I said, we'll kind of dive into this a little bit deeper later. But if you were to look at this as purchasing this business, you would want to see that, oh, it costs 25,000, and this is obviously for 6 months worth of paying somebody. It costs 25,000 to run this business and have somebody in it. So if they were to buy it and not want to work there, they would have to pay somebody else this money to be able to do it. And right now the business isn't profitable. So there's a bunch of different ways to look at how everything looks here. And we'll dive a lot more into that later because that's something that I really love. But, again, let you review this, kind of look at everything, see if anything looks really off. Like, oh, maybe I booked my payroll wages paid on accident to office supplies, and you'll see office supplies is $5,000 that month. Then you'll know to look into that and see what transactions make it up. And we can go in to office supplies, click on this number, and we can see based on July to December what makes up all of the office supply spend that we spent here, right? You can see how the balance grows, what the transactions add up to it are. Then again, another really good way to kind of check your work and make sure everything looks correct is to sort it by months and just look and see if everything really looks consistent. We started late in the month there, 10, 12, 10, 9. Looks pretty consistent overall to me here. A lot of these numbers look consistent. Some of them dip a little bit. You can assume maybe this is because there was Thanksgiving, so it was a pretty long break. Um, we have pretty consistent looking spend on the paper cups goods. Advertising looks decent. There's spikes in certain areas. Insurance looks like there was no utilities that we booked in October, but it looks like the November amounts are double what they usually are. So this is a good indicator that we paid October's utilities in November, and so that's why this is doubled here when it's usually around $100 each. So you can drill down into these and really look at it, right? Now, the one thing you can't really do in this scenario is look at your balance sheet by months, right? So if we were to look at this by months, it would be sort of useful to be able to be like, okay, this is the cash balance and this is what the account ends at the end of every single month. But again, look, you see a lot of these trailing numbers where they don't really change. The balance sheet comparisons become really good quarter to quarter, year to year, or in a specific month to month. So where you're only looking at December and November, or you're looking at all of 22 against all of 21, or you're looking at 2024 Q4 to 2023 Q4, 2023 Q4, or you're looking at Q4 23 to Q3 23, right? So again, I kind of added a lot of extra stuff to the end of this chapter, but I think this is good holistic information to really think about, and this is one of the longest chapters, definitely. So the rest of them should get a little bit faster, and I might over explain some of the things at the very end, but this is a very big this is the chunk of where the course is coming to, where if you went through this whole video, you followed through, you were doing the transactions side by side with me, you should have a really good understanding now of kind of both how categorizing transactions work and how using QuickBooks and using the rules and using batch categorizations and how all of that works. Alrighty, I'll see you in chapter 5.